Hey, this is Jim. It is 9:39 p.m. in San Francisco, California on June the 13th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. First off, I want to say that what I think is about to happen couldn't happen to a better group of people. If you've stuck with me all the way through to this point after 2 years, it means you are not part of the cocaine and hooker crowd. I'm glad they left early, but you are the crowd based on DMs back and forth with you all and any contact I've had. You're the crowd that's the salt of the earth crowd, the veteran crowd, people who lost businesses during the unnecessary lockdown, etc. So the kind of people that I love to see win. And I believe that's what's about to happen for all of you all. So I'm really happy about that, especially if this unfolds the way I think it's going to. So first off, with this view right here, I want to show you the 240-minute price bar chart, especially if you haven't followed any of my videos in the past. The main takeaway here, and I know there's a lot going on, you guys could pause the video and take a look at it if you want to dive deep in the weeds and geek out on this thing. But the main takeaway is back when I was anticipating this thing to unfold more quickly time-wise, the velocity characteristics in the Anemoi terminal and some of the setup in these expanding megaphone melt-up fractals that I was tracking made it look like we would have moved up maybe 300% out of the low. Now that they've extended this thing, because of the steepness of this trajectory of this speed line right here from the point of origin of this entire setup, the current fractal that's unfolding, we're back in a position where, off of this $3.90-ish low, that this thing could be even more than the 700% move that we saw in 2021. So that's great. I personally think we're probably limited on this move between now and say the 4th of July to this $48.10 retest. But this can happen if we can just move above this primary uptrend line within this expanding megaphone melt-up fractal. So again, you guys know what some of the key milestones are. This is probably the most important note that I have on this chart. So $13.75 retest. If we can hit that anytime prior to July 4th, then our melt-up is possible, because what that means is we would have re-entered above this yellow thick uptrend line, which means we would re-enter the primary fractal and be in a position to start to have a cascade move through these different retest levels and pay me later levels, and then attack the speed line, which fits really beautifully with this 4810 retest. So that's the main takeaway from this. I won't spend much time on this. You can pause it if you want to and study this entire fractal on your own time. But let me move forward to what has me really enthusiastic about what I saw today. Actually, this first, and then I'll move on. If you guys haven't seen this sort of the nuances and the psychology, the behavioral analysis behind the past couple months of trading, the main takeaway here is that if you take a look at this January low, you can see the sequence was this up, down, up, and then lower low. So they ran through stop loss levels right here, V bottom, and then an attack of the speed line right here. A little wiki throw over, came down, blew through again, any stops that would have been sitting here. So just a very demoralizing kind of a look to this and feel, and shaking as many people out as they possibly can. That's set up again for another up, down, up, and then the same thing. We were looking for them to run down through stop loss levels. That happened. They hit the 455 retest level and then went through the rest of the vibration sequence. And now price has lifted very stubbornly, but it has lifted into the timing box that the behavioral analysis model had predicted here. So what we were looking for next, and I think will happen fairly quickly, is an attack of this 543 hidden retest level, the 580 retest level, and then an attack of this speed line right here. This would be similar to the attack we had here, but what we're looking for and anticipating, because again, we have this big broad window all the way into sort of 4th of July-ish, and a little bit beyond that, for this thing to run, is I believe we'll move up, see a throw over above the speed line, and then instead of plunging down like this, we should be able to wobble around, and this speed line, which is in theory resistance, should become support, and then take off on another leg to the upside and start cascading through some of those levels I showed you in the first chart. So here's the big news on volume today. And it's not only big news because of the absolute 60-minute volume that we were able to post and the fact that it was a green closing bar, but it's the time of day that we did it that has my attention and is really important. This is getting a little more in the weeds, but again, you guys can rewind or pause and take a look at this more closely. I'm going to review this one more time in case you haven't seen some of the past videos I did. These formations are basically volume fractals that I like to follow, and I like to follow 60-minute bar volume because it can give you a heads up to big moves up or down intraday, as opposed to just tracking end of day closing volume on the daily bar. So all this is representing is the volume spikes within a downtrend, and then we look for what I call nesting or resting volume, which simply means that in these valleys, the highest volume that occurs in these valleys. And the reason that's important is because there's a timing element where this downtrend collides with the nesting or resting volume. That's where you expect to see volume spikes start to pick up again. And at that point, you want to observe whether or not these higher volume spikes are happening on red closing price bars or green closing price bars. That dictates whether you're in a continuation of a downtrend or you're going to reverse and move into an uptrend. So we moved through 3 of these different fractals. This is in the last video I posted, we were heavily focused on this particular volume fractal. We moved into the collision of the downtrend and the nesting or resting volume. We pointed out the fact that our resting and nesting volume was higher than it had been in these 2 prior little wedging volume fractals, which is a good sign. What we wanted to see next is we want to see a price reversal. We got the price reversal. What they did, though, is quickly tried to end it by painting a 3.45 million share a red bar. They did that by literally 1 penny right into the close of that 60-minute bar, but that's enough to control for multiple hours or sessions and try to force a further downtrend. We then recovered, and as you can see from this trend line that I drew right here, you're consistently moving higher and higher. So that's what you want to see. That's really consistent with this breakout from this collision point. And then we were really focused on one last thing, which is in the video I said we wanted to see a 3.94 million share green print, meaning a green closing bar on volume of 3.94 million shares or greater, because we needed to paint through the 3.934 million share red bar. That's where they tried to grab control again, just like they did right here. What we had today was beautiful because in addition to these nice, green bars we've had over the past several sessions that almost got us through that number, we finally did a 6.013 million share green bar. Completely took care of this, almost double, and put us in a position to now focus on 10 million share 60-minute green bars. If that happens, then the trajectory of the advance, instead of being this slow grinding advance, can start to completely change the price trajectory of the move, which is what we want to see. That's also consistent with breaking through some of these Anemoi triggers, the weekly trigger, and moving up through this air pocket toward this monthly trigger. And then down the road again, what we're looking for is 3 consecutive 15 million share green closing bars in a row, consecutive in a row, has to be in a row. If that happens, then we're kicking off the type of volume we saw in May, June of 2021. And I think that is what we're about to see between now and the 4th of July. Here's what's important about today, in addition to the fact that we painted through this red volume bar. The time of day that this happened was the 10:30 closing bar for me. So that means that was the bar that traded between 9:30 a.m. and 10:30 a.m. On the West Coast. So jump forward 3 hours for New York. The reason that's a big deal is because what's typical is for these guys to run hot in the first hour of trading and control the rest of the session. When you have an important green engulfing bar like this within an uptrend, and it happens farther out in the day. So in other words, this 9:30 to 10:30 bar obviously happened, mid-session-ish, as opposed to that 6:30 to 7:30 West Coast closing bar. That's a big deal. I'll show you why. We're going to go all the way back to May, June of 2021. Here's a 11:30 p.m., 11:30 a.m. rather, PST volume bar. Okay, so May the 13th, 2021, we saw some kind of noisy trading here, but that was the first sign that these guys were either losing control or that they knew they would be losing control in the future. And so they wanted to proactively sort of hit the pressure release valve and pump the stock themselves so that they could then regain control, either reload the short side or create a trading range or whatever. So we had that unusual timing on that high volume bar on the 13th. Then we had another one on the 27th of May. And then we had another one on June the 2nd. Here's what that looks like in the bigger picture. And you can see the significance of it. So here's the 13th. And again, you have, it's not like you were completely melting up, but you have some stutter step and then you take off again. Here's the 27th. And then here's June the 2nd. So again, it's the time of day that nice volume was put in place. That's a big deal, and it signals something unusual if you're as deep in the weeds as I am on this stuff. Here's another quick review of hang on, you guys. Let me bounce over to the I'm not going to edit this. It's too late. I'm too tired. Let's see. Where the hell did I want to go for you guys? Here's where I wanted to go. This is the other really important thing about this. A couple videos back, I showed you guys the sort of interesting cyclical timing element where you have two volume spikes like right here, and the amount of time it takes before your next volume spike revisits that downtrend line. What we showed was that based on the fact that this is such a slightly sloping volume downtrend line off of such high volume, puts us in a position to where when the next move up to attack this downtrend line occurs, we know we're going to get a spike of somewhere in the 25 to 27 million range, which is double what we need for our 3 consecutive 15 million share 60-minute bar green closes. We know cycle-wise, we're right sort of at the timing element when we should expect to see an attack. And then now you can see from this lower trend line right here that we probed today on that 6 million share bar. We also have much higher nesting resting volume now. So everything's tracking. It looks to me like we're going to be able to post a 25 to 27 million share 60-minute volume bar at some point, like I said, between now and July the 4th ish. And that based on everything I'm looking at velocity wise, we should be able to now move up at a much larger percentage basis than what I originally thought about 4 weeks ago. And that's strictly because they slowed this algorithm down so much. I pointed that out in the activity that's you can plainly see in the 25 tick bars how long it takes to build a 25 tick bar. Instead of seconds, it was taking minutes or longer. So everything about this tells me that the fact that they slowed this down so much is going to shoot them in the foot. Also, hat tip to Ethan and the guys who have worked tirelessly to challenge the group of people who wanted to shove this, 1 for 10 reverse split down everyone's throats as fast as possible. I've said from the beginning that, in my opinion, a slow walk is to our advantage and to the disadvantage of the short hedge funds. I believe personally that a portion of the yes vote crowd, a portion of people were tricked by some pretty savvy debt whores that are all over Twitter and trying to convince you all that Al and Ethan and these other guys are grifter frauds. It's the exact opposite in my opinion, or at the very least, they're at least guys that know they're going to make a bunch of money through dilution and having things happen really quickly. So anyway, I think we got them by the short hairs here, and I think we're about to see some explosive price movement. It's still a multi-week window, but the good news is that instead of a move to $12 to $20, I do think we can move up toward that 40 plus retest level, which means that most everyone I've talked to through DMs and everything else will be whole or up a decent amount at that point. So that's it from my side. Good news. Good luck.